So I am so excited. Everyone is here tonight. Marc has a really excellent presentation. I always love, talking the stock market with Marc Chaiken because he is absolutely amazing. So I'm just going to start off by telling you a couple different things that we are going to be covering tonight. And then I'm going to hand it over to him, and he's going to get into the heart of the presentation. So first of all, a couple different things that we are going to be talking about is number one, how to avoid overhyped or bearish stocks that can destroy your profits. Now, I love how Marc is going to get into this because, for those of you who are core Simpler members, you've been around for a while, you know that most of us, we really don't short anything about ever. So I'm excited for Marc to go through some of his setups and some of his shorts that he noticed, especially on some of the key stocks that we were all trading last year. He's also going to be talking about the art of timing and specifically how you combine technicals and fundamentals to get a really strong directional edge. I also want to let you know that we are going to be going into some small and mid-cap stocks and some stock picking. So these are some topics that we don't cover a ton at Simpler, but we're also going to cover some of the topics that we do cover a little bit more, such as options and the run into earnings. So it's going to be a very action-packed night. If you have not met me before, my name is Danielle Shay, and I'm a VP of options at Simpler Trading. I'm a market analyst trader and frequent expert commentator in the media these days. I'm usually doing CNBC Trading Nation and Fox Business. And, I'm here because I love talking trading and especially talking trading with people who really know what they're talking about. So, Marc, you've been in the industry for 40 years now, right? I saw on your website, I thought it was 50. So I think my numbers may be wrong, but you've been around for a long time. Absolutely, key expert here. I'm really looking forward to listening what Marc has to say, and we're going to go back and forth on a couple of these stocks. So, we haven't been able to do this in person for a while, have we, Marc?
No, that's sad. I loved going down to Austin and speaking at the annual conference, but sadly we've been derailed. But this is going to be like our first step into the reopening of the educational stock market webinars, big time.
Yes, that's right. And for those of you who you can't tell, they're down here in the front. This is Marc, and this is right next to Henry. So they had a really awesome presentation. This was one of our in-person mentorships that we had. Those are really fun. But I just want to give
Danielle,
yes, it is.
I met your dad, and he said, "Well, you don't want to talk to me. You want to talk to my daughter." And boy, was that ever a good comment.
That's great. That's awesome. Well, I'm so glad we got to meet that day, and I'm looking forward to going through some charts with you here tonight. So I just want to say welcome, Marc. Thank you for being here and sharing your knowledge with us. And I'm going to go ahead and turn off my screen share and keep my mic on, and then you can go ahead and take over the screen share so you can go through your slides.
Excellent. Now, I know that you have been using our analytics in your methodology for what, 3 years, 3.5 years? So
yeah.
Before I start, I'd love to have you share with our folks tonight what you're doing with Chaiken.
Yes, I'm absolutely looking forward to that. I've been using your platform for a while, and it's for those of you at Simpler, that most of us we're highly technical in nature, and the reason why I first got interested in Marc's platform when I met him was because I really wanted that fundamental backing as well, and pretty much everything that I do at this point. In the beginning, I didn't really understand fundamentals when I first started trading. Honestly, I didn't really understand technicals either, but I started off with a trend. And then I added more detailed technicals like the squeeze, stuff like that. And then I added the fundamentals. And for me, that was really just a core piece of my trading. And so what I really like about Marc's platform is it is all of that combined, but I especially like it for the fundamental aspects. So I've been using it for a while, and it's great stuff.
So let me dive right in. Chaiken,
Wait, let's make sure. Is your screen is Mark's screen share working?
can you guys see
I don't
it?
have. No.
No, that's not good.
Oh, there we go. All right, now it popped on. Now can you see it?
You've got the bandwidth issue. How is
Thank
that?
you. Perfect.
All right.
Now it flashed off again.
Oh, it seems like, how is that? No good?
It was working for a minute, and now it's gone. Oh, Daryl's our hero in the background always.
Daryl, what are you saying?
He's doing his magic in the background. This is the part where we have to tell a funny story. Quick now. All right, there we go.
All right, it doesn't seem to like present mode, so we'll do it this way. That's fine. Are we good?
Okay. Yeah, sure. Go for it.
All right, so we're going to look at the Chaiken power gauge rating, which is that wonderful heavy lift on the fundamentals that you can combine with just a couple of technical indicators to give you great setups both before and after earnings. So whether you're an options trader, a swing trader, trading large caps, or tonight we're going to focus on small caps, something we haven't done before, Danielle.
That's right. I'm really looking forward to that aspect.
Yeah, where do you see some of these names? And we've been talking about them for the last 6 months. So my background is known to some of you, especially if you've been in the trading room or at the conference. Founded Chaiken Analytics, created Chaiken Money Flow, and then the power gauge rating after 50 years on Wall Street. By the way, it is 50, not 40, but there was 10 years when I was sort of in, let's call it retirement, before we started Chaiken Analytics. But I've lived through 9 bear markets, and I got to tell you, they are no fun. If you're new to trading or you've been trading only for the last 10 years, you haven't lived through a bear market. March of 2020 was like a bad dream. 23 days, 33% down. That is not a bear market. Bear markets last 12 to 18 months. And we've got the tools to help you thrive and survive in a bear market. And being on TV means nothing, although I love the fact that Danielle's on TV, so I'm going to modify that. Being on TV for me means not a lot, because I've been doing it for 25 years. But for Danielle
it's okay.
to
John
be on
says
there,
it all the time. John says it all the time. He makes fun of me all the time.
It means a lot. If you don't make sense, if you don't have credibility, you don't get invited back. So I am so pleased to see Danielle on Fox Business, on CNBC, just killing it. But what we're talking about tonight is the Chaiken power gauge rating for both stocks and ETFs. And we're going to show you how the power gauge rating for ETFs helps this whole top-down process that Danielle is involved with every day. Best sectors, best industry groups, where the best stocks live, that's where they live. So we developed a 20-factor quantitative model in 2010. We're 10 years into a real-time survival reality show, which is the stock market. I mean, think about it. The stock market's a reality show. Every day, we're pitted against everybody else in the markets. And we need tools we can trust and believe in and count on. And that's what the Chaiken power gauge rating does. If you're not using fundamentals, this does the work for you. Single rating goes from very bearish to very bullish. And it's a confident read on stocks and ETFs. What we're going to talk about tonight is a top-down approach. That's what all the professionals use. You look at any professional money manager who's successful, whether they're running a mutual fund, a hedge fund, a family office. They've got a top-down approach. They all do it a little differently, but the approach we're going to look at tonight has worked for over 50 years. You identify strong sectors and industry groups. You focus on the stocks within those industry groups with the best potential. But how do you know which stocks have the best potential? That's where the power gauge comes in. We start with the fundamental rating. Want to put the odds on our side, and then we zero in on the best stocks using 3 key indicators, 1 fundamental and 2 technical. So you don't have to complicate it, although what we do is so compatible with what Danielle's doing, what John Carter's doing. So ready, aim, fire is something that I've embraced for years, the squeeze. When you start with a fundamental indicator and then overlay those really powerful technical tools that Simpler Trading provides, you've put the odds in your favor. And what we're going to talk about tonight is what to buy and what to avoid. Danielle zeroed in on it. We're in a stock picker's market. Can't just buy the SPY or the IWM or the QQQ and expect to outperform. So our solution is the power gauge rating, and we've created a new platform called Power Gauge Analytics, which we're exposing for the first time outside the whole Chaiken community. What we do is driven by one underlying principle. Fundamentals drive the market. I've known this since 1966 when I first got registered as a stockbroker. But emotions drive the market to extremes, and we've seen that over the last 3 years in spades. For me, 50 years on Wall Street, the path to profits has always been to combine fundamentals with technicals. Problem is, fundamental analysis is hard. It's time consuming. Got to know what to look at, how to weight things, how to leave your biases at the door, because so many people bring baggage to the investment process. They love Tesla, they hate Tesla. They like retail, they hate retail. They don't want to buy the big banks because they screwed people in 2008. You've got to be objective, and that's what the power gauge rating does. So what is the power gauge rating? Well, at its simplest, it's just a display like the gas gauge on your car. Simple but powerful, goes from very bearish to very bullish, helps you find the winners and sell the losers. When I spoke at Simpler Trading Conference, I think it was 4 years ago in Austin, March 2017, John Carter said one of the most profound and simplest things I've ever heard. If you're a trader, your job is to shoot the losers. You're never going to hear it better than how John said it. Now, the graphics that he put up on the screen were funny, but the message was very serious. Whether you're an investor or a trader, you've got to get rid of the losers. That's what the power gauge does for you. And during earnings season, it's a GPS. It steers you to the stocks that are most likely to report a positive earnings surprise and gap up, and it alerts you to the stocks that are most likely to report a negative earnings surprise and really tank. And that's what we're going to talk about here. So when I first met John 6 years ago, 2015, a friend of mine had introduced John to the power gauge rating. Now, John sees everything. And as he says in this wonderful endorsement, a lot of hyped up tools out there, but something that combines 20 plus technical and fundamental indicators is awesome. John called it an awesome meter for stocks, and that started this wonderful relationship which led me to meet Danielle 4 years ago. So what is the power gauge rating? 4 components, 20 factors. This is what the smart money looks at every day. The magic is in recognizing that everybody has a different style and a different time horizon, from the high frequency traders to the people in the simpler trading room who trade intraday and swing trade for 3 days, 5 days, 10 days, to the value investors like Warren Buffett and Seth Klarman and Howard Marks. Everybody is looking at their toolkit, their preferred indicators. And what we've done with the power gauge rating is to combine them into a stew with specific weightings that look at value, growth, technicals, and sentiment. Expert opinion. What is the smart money doing? And in this evening's webinar, we're going to zero in on industry group relative strength. It's an underappreciated concept, and it's the key to profits. Now, the performance bears out my confidence in what we're talking about tonight. Over the last 21 years, the very bullish stocks in the Russell 3000, at any given point in time, over 400 of them, been up over 18% a year. The very bearish stocks up barely 1%. So if you're trading from the long side in the very bearish stocks, the odds are skewed against you. Doesn't mean they can't go up. It just means that you're bucking the trend, driving the wrong way on a one-way street. So in this evening's webinar, we're going to show you how focusing on the very bullish stocks, particularly in small caps, which I think are going to outperform over the next 6 to 12 months, can lead to outsized gains.
I'm really looking forward to your information on small caps, Mark, because, we trade a lot of the large cap, mega cap stocks, Amazons, Teslas, we're doing that all the time in and out. But I'm really looking forward to listening to your information on your small to mid cap stocks here.
Well, Danielle, a lot of well-known names like Signet Jewelers. We're going to talk about Signet Jewelers. They own Zales. They own 4 or 5 different brands at the retail level. That's a small cap stock. It's only in the last 2 years that the mega cap stocks, some of them with no earnings whatsoever, have captured everybody's imagination. But real companies like Louisiana Pacific, Signet Jewelers, are small cap companies. The way we define small cap today, which is between 500 million and 2 billion, or mid cap between 2 billion and 10 billion, a market cap. So we talk small cap, mid cap, but really some of these are household names. That Dick's Sporting Goods, mid cap stock. We're going to talk about it on this evening's webinar and show people how power gauge rating and very disciplined, simple entry signal could have positioned you ahead of earnings. And that's what this pyramid is all about, discipline. Successful trading demands a disciplined methodology. So at the top of the pyramid are our 2 fundamental indicators, power gauge rating and industry group strength. Bottom of the pyramid, just 2 technical indicators, Chaiken money flow, which many of you know from your online brokerage platforms or stockcharts.com, and a unique way to look at relative strength. And then you need some disciplined methodology. Could be ready, aim, fire, the squeeze. Could be Danielle's wonderful way to look at 10 or 12 stocks and see where the various moving average trends are signaling an entry. You need a disciplined way to get in and out of trades. And for us, the discipline is all about the power of 3. The Holy Trinity. Chaiken power gauge rating for the fundamentals, money flow, and relative strength for the technicals. And I'd like to start out by looking at a pattern that we've talked about for 10 years, classic Chaiken bulls. Power gauge rating is bullish. Stock is outperforming the market, and Chaiken money flow is strong. That's that power of three. Now, for years, we've looked at large cap stocks that slotted in Adobe, Microsoft, Tesla, NVIDIA, AMAT. But tonight, because I want to focus on small caps, we're going to look at a stock called Danielle Shipping Company. The world economies are picking up, and guess what? Containers and shipping are in a bull market. So we read the chart from the bottom up, because at the bottom of our 1-year chart on Danielle is the power gauge rating, which turned bullish in October. Right above that is our heat map of relative strength. When we've got a bullish stock, that's our starting point. We want to know if the stock is underperforming or outperforming the market, because no matter how good your fundamental indicator or research is, if the market doesn't agree with you, guess who wins? The market always wins. So we want a stock that's got bullish fundamental potential, which is what the power gauge does, outperforming the market. And then we're looking at Chaiken money flow to see what the smart money is doing. If it's green, consistently over time, we know that there's intense accumulation. Now, if you think that that's a lot to handle, we've created something that reads the chart for you, which we call our checklist. So we've taken 3 strength factors: power gauge rating for fundamentals, relative performance, the S&P, and industry group strength, and combined it with 3 timing indicators: long-term trend, money flow persistency, and overbought, oversold. Now, right now, Danielle, which has made a new high just yesterday, is overbought. So from an options point of view, from a swing trading point of view, we want to wait. And we don't have to analyze the chart. For 4,000 stocks, the checklist does it for you. Now, when we look at a bearish pattern, we call it the classic Chaiken bears: power gauge rating bearish, underperforming the market, Chaiken money flow red, not green. I've been using Clorox as our poster child for over 6 months.
I like it, Mark. That one's great, especially because of the crazy hype before. Remember that?
Well, people are buying
crazy
wipes and disinfectant. I mean, Clorox is a nasty product. If you spill it on your jeans, you got tie-dyed jeans. This is like a strong product, and people went nuts. And the fundamentals were okay, but the stock got way ahead of itself. Traded up to 240 in August. Outperforming the market, crazy bullish. Everybody was buying bleach and wipes, disinfectants. And then reality set in, and in August, the stock started underperforming the market. The stock was trading at about 215. And then in October, with the stock at 210, power gauge turned bearish. That is a fatal blow. If you're long the stock and your 401k, get out of it. If you're looking for short ideas, this should be on your radar screen. And then Chaiken money flow tells you what the smart money is doing. And the smart money was selling rallies. So here in October, when the stock rallied up to our long-term trend line at 218, Chaiken money flow, which I built in 1982 to fluctuate between red and green around the 0 line, never got into the positive territory. We call that a money flow sell alert. Smart money was selling the rallies. Even after the short covering rally, this was believe it or not, in January, the Reddit people were buying Clorox. Stock rallied from 190 to 220, actually 225. Smart money was not buying into that rally. And here you have Clorox 6 months later trading at new 52-week lows. And this is what Danielle was talking about when we started the webinar. You can find this in high-flying stocks like Beyond Meat, like Fiverr, like Zoom, or very mundane household product stocks like Clorox. These are the stocks you really need to avoid, and you got to know about them. And one way to know about them is to know when they change personality. So we developed this pattern that we call spotting personality changes. Personally, I think it's the key to making and keeping profits. If you're like me, you get stubborn about things. Put your feet in cement, form an opinion, and don't give it up very easily. In the stock market, you need to be flexible. And we're going to look at the stock that Danielle and I both liked back on October 1st, the last time we did a webinar together, Chewy.
That's right. It was I know it was my biggest money maker last year.
Oh,
it
I
was
know.
my
We
top
loved
traded
it.
stock. We loved it. It was so much fun riding the short squeeze, and it was a great COVID stock and everything else, and then it just womp womp.
Oh, yeah, we're going to look at that. But we're still buying stuff from Chewy for our dog. Now, do you have a dog, Danielle?
I do. I have 3 dogs, Mark.
Oh, my.
Yes.
We gonna talk about them or no?
Mars, Cosmo, and Astro.
Wow. Astro, were you a big Jetsons fan?
So
You're
it
too
was
young. You're too
actually
young. You don't know about the Jetsons.
it was actually because I wanted to name her after the Houston Astros because my
Oh,
husband
there
is
you
a
go.
huge fan, and I thought it would convince him to let me get a little dog.
There you go. What kind of dog is it?
It's a Maltipoo.
Oh, nice. Well, is Nolan Ryan still pitching for the Astros? I don't think so.
I have no idea.
I know. Ask your husband. So let's look at personality changes. Stock is underperforming the market, and then it starts outperforming the market. Here's a fabulous stock that I know Danielle likes because cybersecurity is everything right now. We're worried about Chinese, the Russians. We've had pipelines disrupted. We've had meatpacking plants disrupted. But there are bullish cybersecurity stocks and there are bearish. And Fortinet is my favorite. In fact, we talked about this on a webinar in January, February, when the stock was 200. Now it's trading at close to 230. And what I want to focus in is the personality change. Our relative strength indicator went from red to green. It's that simple. This is a stochastic of relative strength that goes from 0 to 1. So simple. But there's persistency. When you get a bullish personality change, it typically lasts for a long time. We don't run out and buy it right away. We look for a disciplined entry point. So once we have that personality change, when the stocks broke out, started outperforming the market, we look for some sort of buy signal. In this case, it was a pullback to an 8-day low, and that's our oversold buy signal. And that came at about the 148 level. Here we are at 230, and everything still looks good. Power gauge rating, relative strength, money flow. Smart money is buying Fortinet. Now, what does a bearish personality change look like? Well, it's Chewy. Here we are. Back in October, Danielle and I did a webinar. Everything looked great. Chewy was trading at about 60, 58, 60 on the way to 118.
That was a fun
Outperforming the market.
ride.
Oh my
That was
God.
fun.
You traded that a lot. Did you do intraday or swing trading?
Marc, I never intraday trade. It's very, very rare that I do. Pretty much all of my trades are usually overnight for earnings, or they last like a maximum of 2 weeks for options anyway. For stocks, I hold them longer than that. But yeah, I mean, those were all pretty short-term trades, and it traded really well going into the key psychological values on Fridays and everything else too.
Yeah, and then look what happened. Power
Uh-huh.
gauge turned neutral, and then in March, the stock broke down. And it started underperforming the market. We call that a bearish personality change. It's not rocket science, it's just numbers. And by the way, when you made that new high up near at 118 in February, look at Chaiken money flow. It stayed in the red. Bearish money flow sell alert. Subtle nuance. You had to be looking at the chart unless you had a signal that was in your email box. But then look what happened on all these rallies. 6 weeks sideways to up. Chaiken money flow stayed negative. Smart money was selling the rallies. Sell signal. Relative strength sell. 4 to 8 weeks of underperformance. Stock moves above its 21-day average, underperforming the market, drops below it. Very similar to the ready, aim, fire signal. But we use the power gauge rating to filter that. And then it just happened again right before an earnings report. So you get these patterns before and after earnings. That's an important thing to realize. Some people only trade before earnings or don't trade at all before earnings because they're nervous about the volatility. We found that there are patterns before and after earnings. And that's where the power gauge comes in. Now, there's one other thing about relative strength that is so important. Relative strength can help you maximize profits. Now, what I mean by that is when the power gauge is bullish and the stock's outperforming the market, we want to be long. So here's the stock, Digital Turbine. Full disclosure, still own some, even though the power gauge turned bearish. My wife Sandy bought this. She's peeled off part of her position a number of times along the way, but in December, she bought it at $10.40 back in July. I'm sorry, $12.40. The stock rallied to about $60, and then in December, the power gauge turned neutral. But look at the relative strength. Big, green, heat map. As long as that relative strength stays bullish and the money flow is strong, you can stay in that stock. Now, you want to protect your profits because here's a stock that went from $12.40 to $100. So you don't want to give up that gain, even though Sandy peeled back part of her position along the way at 25 and then again at 60. She's still riding a bigger position because of relative strength. So relative strength can help you see changes in the market, so bullish or bearish personality changes, but can also help you maximize your profits by keeping you in a position beyond your sort of pain point, because we all love to take that profit. But if you look at what John Carter did last year in Tesla, you realize that there are some big rides. And if you're there for the big move, you can maximize your profits. So I'd like to look at small caps now. And by the way, Digital Turbine was and is a small cap stock. Went from 10 to 100 with a bullish power gauge rating, relative strength and money flow, but it's still a small cap stock. They make app serving software for mobile apps. They're on 45% of the smartphones worldwide. They're on smart TVs. It's an interesting business, but it's still a small cap stock. So let's look at 3 small cap classic bulls.
I like that one, Mark. Apps, people in the trading room, they ask us about that all the time. It also has a very gorgeous looking weekly squeeze. So you're
Oh,
still,
nice.
yeah, it has a weekly squeeze. I'm looking at, man, do you think it could make 120? I've got a fib extension up at 120 on the weekly chart.
Ooh, it's going to take a huge earnings report. They don't report again until August. And without an earnings report, it's not going to make it. So they just reported a positive earnings surprise, just as they did back in February and then in October. So the earnings surprises repeat themselves over and over and over again, Danielle. And I know you know that because you trade earnings.
I love trading earnings, Mark. It's a lot of fun. The members, the market's been so stagnant, and I love what you said that if you're just in the S&P, it's going to be really hard to outperform. So I really like to focus on these individual stocks because I've really been focusing on that a lot as well. And the market's just been so stagnant lately, but we have individual stocks that are still moving. So,
well, that's where our discipline comes in. I've got that long-term trend line at 75, and the stock's underperforming the market. I'm going to get really bullish if it closes above that long-term trend line, above our upper volatility band, and we start outperforming the market. So I'm going to let the market tell me what to do. I love the fundamental story here. The power gauge is not bullish on it right now. It's neutral. But I'm going to let the market tell me what to do. But I do like this stock long-term. Really good management. Guess what? I think they're based in Texas.
of course,
They're based outside of Austin. I think
I'm not
they're in Dallas.
surprised.
They might be in Dallas, but yeah, they're in Dallas, Austin, somewhere up there. So let's look at 3 small cap stocks that are classic Chaiken bulls: MCOR, Genco, and Haverty Furniture. So what does MCOR do? Well, it's construction engineering. There was a lot of buzz about the Boring Corporation, which is Elon Musk's tunneling company. And they just built some sort of tunnel in Las Vegas. It was a lot of smoke and mirrors because it's not really it's a tunnel, but you've got Tesla vehicles taking you from here to there at the convention center. But here's a real company that does this and actually makes money. And Boring Company is not public yet. MCOR, they build tunnels, bridges, and this is the perfect example of a small cap classic Chaiken bull. Since November, when the stock was trading at around 80 on the way to 130, you've had a bullish power gauge rating, outperforming the market, strong Chaiken money flow, institutions are accumulating the stock. So it's a stock I want to buy on weakness. Genco Shipping. The marine group is very strong. We looked at Danos as our classic Chaiken bull. Here's another stock, and by the way, I own this. My wife Sandy owns this. We've been buying the dips. Positive earnings surprise. Bulk shipping rates are off the charts. Container prices are through the roof. There's short supply. It's the ideal storm. And by the way, if you look back 10 years, these stocks are way below their 10-year highs. So it's a bulk shipping stock. Everything's in place. We're looking to buy the dips. So here we see an example of a dip that happened after a very positive earnings surprise. Came down, got oversold. Chaiken money flow stayed positive. Stock was trading at $15. Now it's rallied to $18.50. This is what you can do with small caps if you're looking at strong industry groups. And here's Haverty Furniture. It's a retailer. It's a reopening trade. We had what was perceived to be a negative retail sales report today, but they readjusted April's numbers upward. So it's really a wash, but the market took retail stocks to the cleaners today. So when I pull this chart at about 1 o'clock, Haverty was down 5% on the day. Just recently made a new all-time high. Power gauge, money flow, relative strength, that power of three was all in place. And when I look at the charts tomorrow, I'm going to see that we're oversold, and I'm looking to buy the stock. I made this my bullish stock of the week in my weekly newsletter that we call Market Insights last Sunday. But I said buy it on a pullback below the 21-day average, which is what happened today. So here's three small cap stocks, all with that classic bull pattern. And this stock has gone from 15 to 50, whereas a large cap stock might go from 150 to 300. Double. Here we've gotten a triple in a stock in a very strong industry group, which is specialty retail. And by the way, the consumer is flush with cash. Not going away anytime soon. Looking to go out to the malls, looking to spend, looking to redo the house, move away from online purchases and get out there and buy furniture. And that's what we're looking at. Small cap stocks, specialty retailers, shipping, construction and engineering to play the infrastructure move that's likely to come. So that's just three examples of really good small cap stocks. So now I'd like to zero in on this top-down approach that we talked about at the beginning of the webinar. Research from Zacks, Standard & Poor's, Investors Business Daily over the last 30 years has demonstrated that strong stocks and strong industry groups give you a tailwind, whether you're day trading, swing trading, or putting stocks into your 401k plan. You're looking for a tailwind. You don't want to buy weak industry groups or stocks in weak industry groups. So now that we have power gauge ratings for ETFs, we've got 22 industry groups with spider ETFs. We've got a methodology to take advantage of that. Our power gauge ratings combine fundamentals and technicals. It's the same approach that we take for individual stocks, but we've taken it up a notch because we look at the underlying stocks within an ETF, summarize the bullish and bearish ratings, and then we look at the technicals on the ETF. This is unique. It's predictive. We've won awards for this. So we start with those power gauge ratings for ETFs, and my top-down process zeroes in on the best sectors. This is what the smart money does every day. So as of this morning, energy, financials, materials, and real estate. Real estate is booming right now as a sector. REITs, real estate management companies like Jones Lang LaSalle, CB Richard Ellis, CBRE, are doing really well. But energy is on a roll. Financials are another story because interest rates are dropping, 10-year Treasury down under 150. The banks are hurting. The underlying fundamentals are great for the banks. They're awash with cash. They're turning away deposits because they don't know what to do with it. But we're looking at energy, materials, and real estate right now. But once we've identified the sectors, we want to see which industry groups have the best power gauge ratings. So we start with the sectors, then we zero in on the industry groups. And here we see our industry group ETF ratings. Oil and gas, mining, a couple of financials, home builders, aerospace, real estate, and retail. I love retail. Last week's earnings reports from Signet and RH, the old Restoration Hardware, were just killer. And a big difference in what happened last week and this week to what happened leading up to early June is that stocks are responding positively to bullish earnings reports. Whereas in April and May, it was a sell the news environment. So retail is really strong. The consumer is flush with cash. So we want to look at the XRT, the retail ETF. And here we see that power of three working in an ETF the same as it does in an individual stock. You've got the power gauge rating, relative strength, and money flow, all strong basically since December.
I like it. It looks
And
great.
well, you do this, don't you, Danielle?
Oh,
You
yeah.
look at inside. You're looking under the hood.
Yes, I like to combine fundamentals, technicals. Usually I look at the last 8 quarters earnings. I'm looking for quarter over quarter, year over year growth. And then I look for relative strength. I love your Chaiken money flow. This is awesome. It's so visual. Anytime anything can be made more visual, I'm always a huge fan. And what I really like about your platform is how you rank everything and then it shows similar picks. So for example, you're looking at Dix right here, right? But then you have a list of other tickers that fit that same criteria. And so that's where I can get a lot of really good ideas because, for example, the Dix chart is awesome, but hey, let's look at some of the other ones as well. And then you can kind of get a couple different picks in the same area that's also strong. So I'm quite a fan.
Well, what's really interesting, because we're going to look at Dix now, is that Dix has had a series of positive earnings surprises. Power gauge rating bullish, market agrees with the model, which means it's outperforming, persistent accumulation. Then you look back, here we're looking at 4 quarters, 8 quarters is even better, just positive earnings surprises. And after the last one, something interesting became apparent. HIBB reports 2 days after Dix does. Same business. So if Dick's Sporting Goods reports a positive earnings surprise, what do we think Hibbett's going to do? Well, it's going to probably report a positive earnings surprise as well, and it did. But the real play was in Dick's. It was buying the stock when it got oversold ahead of that earnings report with Chaiken money flow positive. So you had a buy signal here at about 86, and then the positive earnings surprise caused the stock to spike up. And because of this new sort of pattern where people are buying breakouts, stock just kept going. So new highs, buyers are coming in on dips, positive earnings surprises. It just doesn't get any better than that. Now let's look at Signet Jewelers. People are saying, well, what's different about May, June of 2021? Well, the big difference is people are getting married again. They're buying engagement rings. Someone said, well, why would I buy Signet Jewelers? And that was before the earnings report. Had this debate internally with one of my quant analysts. I said, well, I don't know why, but it turns out when Signet reported a positive earnings surprise, it was because people are buying engagement rings. They're getting married again. Coming out of the COVID lockdown, smart money is buying the stock because they know this. But it's not just what happened here. It happens over and over and over again. So it happened in the previous quarter. Positive earnings surprise, spike up, you pulled back, you got a buy signal. In this case, the buy signal came ahead of earnings. So that's the one thing I want to stress on this evening's webinar, Danielle. Setups happen whenever they happen. And if you're only looking for them ahead of earnings, you're missing out on some of the great opportunities. But this is an example of strong industry group, positive power gauge, good relative strength, smart money buying, and a disciplined buy signal. It's what I look for every day. Now, final piece of my top-down process is to screen for the best stocks. But in this evening's webinar, I wanted to take a different approach because I know Danielle loves one of our tools, the discovery engine. So in this case, we're going to screen for bearish stocks first. Then we're going to swap them into bullish stocks. So I did a screen in Power Gauge Analytics, looking at the weakest industry groups. So we curate lists. We have strong industry groups, weak groups, value stocks, growth stocks, small cap, large cap. So I started with our universe of stocks in weak industry groups, 375 stocks, looking for stocks with a very bearish Power Gauge rating. So we got 24 of them, including Chewy, which we've already looked at, and DraftKings, plus a lot of other names that you might know, like Stitch Fix, Church and Dwight, Booking.com. But let's take a look at DraftKings. It's a bearish stock in the gaming industry. Had been a big performer. States are opening up to gambling. DraftKings is in a competitive space. But guess what? Just like with Clorox and Fiverr and Zoom, Power Gauge turned bearish in late March. Stock was trading just above 60. And then it started underperforming the market. And basically the stock has gone nowhere. It made a new low, new 6-month low at $40, rallied to 50, 55, and today it was down 6% when I pulled this chart. So I'm going to take our discovery engine, big drum roll for the most exciting product I've ever built, stock ideas for you. So knowing that DraftKings was bearish, we plugged it into the discovery engine, and at the top we see stocks like DraftKings, bearish rating in the gaming industry, Wynn, Las Vegas Sands, Penn Gaming. Penn Gaming had been a very bullish stock, not anymore. But right under that are potential swaps. So here's Scientific Games, SGMS, with a bullish rating. So if you're long DraftKings and you're hurting because the stock has dropped from 65 to 40, what do you want to do? You want to swap DraftKings into Scientific Games, or get out of it completely, but look at SGMS as a potential buy. So you could have sold DraftKings when the Power Gauge turned bearish, swapped it into SGMS, which went from 45 to 70, and it's got all the characteristics we've been talking about on this webinar.
You know, I love how you did that.
Oh my God. Have you traded this stock? This is
No,
great stock.
I've never heard of it until you brought it up here tonight, and I checked it out and I loved it because, you know, I was looking at DKNG and Penn, and I mean, because you know that people are going back to Vegas. I can't wait to get back to Vegas, Mark. I love Vegas. And I'm looking at DKNG and Penn, and I'm thinking, what is the deal here? But I love what you did here because you used the overlying idea or the underlying idea and then came up with a different stock that you actually have some money flow in. So I like it a lot.
And it's all because of the discovery engine. This is the single best tool I've ever built. It helps you find stock ideas. It's an amazing tool. Netflix pioneered this technology.
Wow.
So you watch a movie. I don't know, what have you been watching lately? I've been watching some odd stuff.
Well,
I'm watching Lucifer.
Oh, nice.
Lucifer. Do you know what Lucifer's about?
I haven't actually seen that show, but I do watch quite a bit of Netflix shows.
It's funny. The devil gets bored in hell, and so he goes to Los Angeles for a vacation and opens a nightclub.
That's great.
But the point is now Netflix is pushing me a series like Lucifer, and it's pretty cool. So the discovery engine is part of Power Gauge Analytics, and we've really covered the very important ground here. This is what what we've looked at tonight is what you've been using in Chaiken Analytics for the last 5 years. but we've now packaged it into a product that we call the Power Gauge Investor and Power Gauge Analytics. And I know you've had a little bit of an opportunity to take a look at it, Danielle.
Well, Mark, I absolutely love this because what I love about Chaiken Analytics is that I can go in there and I can search for different industry groups or different stocks and see how they compare against each other and see where the buy signals and the sell signals are and all that kind of stuff. And I absolutely love that. But what was missing was your picks. I mean, you're the genius behind the show here. So what I love with this new product that you have, and you guys, this is the first time that Mark is bringing this forward, and he's bringing it to Simpler before anyone. It's really exciting. It's called the Power Gauge Investor, and basically what it is it's a Mark's personal, newsletter where he's going through, he's doing the research, and then he's sending it out to you. He's got a portfolio in there that shows exactly what stocks are in there, and you're messaging out the subscribers based on your buy and sells, correct, Mark, with some information to go along with it, right?
We are. It's a monthly newsletter, and we've got a 10-stock model portfolio and then one new recommendation a month. And we haven't offered this to anybody outside the Chaiken community. This is the first time we're doing it. And the first newsletter is coming out on, I think it's the 24th. It's the fourth Thursday in June. So anybody who subscribes tonight is going to get basically a first look at our Power Gauge Investor newsletter. It's a charter membership. And along with that, we've got a special report that goes into the Power Gauge, each of the factors, our whole technical approach with relative strength and money flow explains everything. And this is how we found small cap stocks that have just gone through the roof, like Genco, Danos, EME, Haverty. So that special report comes with the subscription, and with the subscription you get a free year of the Power Gauge Analytics system. It's the same set of tools that you've been using for the last 4 years. We've stripped out some of the stuff that people found overwhelming or confusing, our options, and some of the reports that were in there. We've basically zeroed in on just what's important to successful trading. And we're including our weekly newsletter, My Market Insights, our morning insights, which comes out on Monday, Wednesday, and Friday. We've got an ideas dashboard, the stock screener that you've been using, and the discovery engine. And this is a real value. This package is going to sell for $5,000 once we get through this initial rollout. But for Simpler Trading, we're offering this charter offer, special reports, the monthly newsletter, and the Power Gauge Investor platform. And we're offering it at what I think is a really attractive price, $2,500 a year. And we've got a full credit guarantee. If you don't like the product, at any point, you can call us up and we'll give you credit for any of the other Chaiken products we have, Chaiken Analytics, the new products that we're going to be coming out with. So we're really backing this up with our belief that this is something that you're going to benefit from. The charter membership, the special reports, Power Gauge Analytics platform, the discovery engine, and then the special bonus 10 stocks to avoid right now and a full write-up on each of these stocks. We've mentioned a couple of them like Beyond Meat and Fiber on the webinar, but 10 stocks that we think you should be selling on strength as the market shifts from value to growth. It's another special bonus. So Danielle, I'm really excited that we got a chance to offer this to the Simpler Trading community. And we're not going to offer this outside of Chaiken. This is an exclusive offer for Simpler Trading.
Awesome, Mark. Yeah, I mean, I think it's really exciting because, I love the platform. I think the platform is so valuable. And then, adding the newsletter to go along with it is just a great combination. One of our members, Helen, has a question. What about for those of us who already have Chaiken Analytics? How could they get access to the newsletter, or what would that look like? Do you know the answer to that?
I actually don't. Helen, you've stumped me. But I'm sure there is
I'm
a
sure there's an
special,
option. Yes, I'm sure.
I'm
I'm sure
sure
there's an
there is
option,
an
right?
option. Yeah. The website is www.poweroffer2021.com. And I'm sure there's a special discount for Chaiken Analytics subscribers. I think it's probably going to be $1,500. It might even be $1,000. But you may have to call in to our support desk, Helen, to get that. I forgot that there are so many Chaiken Analytics subscribers in the Simpler Trading community.
Yes, there are. We love Chaiken Analytics over here at Simpler. Hey, I have a question for you though. I think, our members always love to get a little inside look. There's somebody asking if you could show the platform to see how it looks. Would you like to do that? We can post the link to the
I would, but the fact that we couldn't do the presentation in slideshow mode suggests that that's going to be a problem. I can try and do it, but it's probably not a good idea.
Well, let's get the link up there to
I may have just blown the whole thing here.
No worries, Mark. Let's
yeah, it's happened before. There we go. Are we
perfect.
up?
Thank you, Sarah. There's the link.
We rang the cash register.
We rang the bell. Yes, we did.
Let's see if we can. Let's see if we can do it. Maybe I can do it. It's late here in Connecticut, and let's see what we can do. Danielle, what were you trading today? I know yesterday you were trading into the close. What are you trading?
So right now I have a little bit of an aggressive trade on NVIDIA. I've been trading it going into the split with the way that Tesla and Apple acted last year going into the splits. Basically, I was trading some momentum on that. I also have some unbalanced flies on United Healthcare, looking for it to hold support around the $400 price point. My main trade right now is NVIDIA. I really don't have too much going on right now. I have a bunch of stocks that I've just been adding to over the course of the past couple weeks, but I haven't been trading a ton of options because the market's been so slow. Right now, what I'm doing is I'm gearing up to get ready for the run into earnings. And so, making my watch list, and I'm getting ready. I'm looking at Taiwan Semiconductors. That's one that usually does pretty well for the run into earnings. I'm looking at the financials, potentially doing a run into earnings there. And getting ready for a lot of companies, the major tech companies that are going to be reporting in July. So those are some that I'm focusing on right now.
Yeah, so Taiwan here. So this is where we sometimes part company. Positive earnings surprises on Taiwan, but everybody sort of knows the story. Big expansion of capacity, largest semiconductor manufacturer in the world. Power gauge ratings bearish. It's got to break above that 125 trend line. Next earnings report is due out July 16th, so we're a month away. What's our checklist saying? Nothing good here. Bearish rating, underperforming the market. Industry group is strong. And our timing indicators are all neutral. So I'm going to wait and see as we get closer to earnings, but let's see if there's anything in semiconductors that does ring a bell. And here's a favorite of yours, AMAT.
Yes, AMAT looks great right now. I really like it a lot.
And we got a money flow buy signal today. A checklist is totally different than Taiwan. This is what we want to see, folks. Everything's bullish. Power gauge rating, industry group strength, outperforming the market, oversold. This is what the checklist can do for you, and the whole Chaiken Analytics platform. And in this case, we're looking at the Power Gauge and Analytics platform. Very tightly put together, large cap, small cap in that semiconductor group. Here's one that I've really liked, AMKR, coming back. Semiconductors are really taking it on the chin.
Yes.
And, you know, there are some small cap semis that got pounded that I think are really attractive.
Oh yeah, which ones do you like? I love looking at the semiconductors.
UCTT, love that stock. And here's a small cap, very small cap. Don't buy this, folks. This is a $150 million small cap. Intest, very cyclical, been bullish for a year. Stock's gone from 4 to 16, but that's an example of what you can find with the power gauge rating. And if you go to the checklist, it tells you to sort of back off a little because overbought, oversold indicator is just neutral. But there's a lot of stuff in here. I like Kulik and Safa. We had this dip in May, April, May, when a lot of the semis went under their long-term trend lines. It shook out a lot of the weak holders, and now we're moving back up again. And then let's just go to the, let's put in a stock into the discovery engine and end the webinar on that note. What do you, just give me any stock that's on your mind.
I think that they wanted to see NVIDIA. Were you trying to share your charts though, Mark?
Oh, you're not seeing them?
Mm-mm.
Uh-oh. Oh, I've been going through the whole system and you're not even seeing them. That's the problem.
We're stuck on your slideshow.
Oh my God, I just went through a whole demo of the system. Well, folks,
I thought that you said that you didn't think it was going to work.
Well, it didn't because I shared the application instead of the whole. So I was doing the whole screen share. Let's see if we can do this. I just did the whole example of Chaiken Analytics and nobody saw it.
Oh my goodness.
No. Very hard to do. Sorry, folks. I thought I was giving you a great demo and nothing showed up.
You should just be able to, when you click share screen, you don't share the application. You just share your whole monitor. You share whatever's on, one monitor.
That's what I just did. But that didn't work for me. So I think we should wind this down.
Okay,
Danielle.
great.
We'll be happy to somehow find a way to demo this to people. But we do have a great offer. The first newsletter is coming out in less than 2 weeks, a week and a half. And we've got a really exciting recommendation in there, small cap stock that I think is going to really outperform. And you get the platform to boot.
Yes, it's so exciting. And and people see me use the platform too on a regular basis as well. So I can do some sharing tomorrow as well.
Yeah, I'm trying to share, but let's see what happens. So is this now live?
Oh yeah, we have your PowerPoint.
Oh, there you have the PowerPoint or the platform?
You're good.
Platform. Well, we did try.
Yes, your platform's working now, Mark.
Oh, there you go. Well, so
Very,
we went through the dashboard with our ideas.
they're gorgeous.
So our market insights, the ideas, which is small cap, large cap, Google, our favorite of the FANG stocks, and then you can go right into the platform. Checklist. So we were looking at NVIDIA, which has broken out the new highs. But we really liked AMAT, where everything is bullish. There's your checklist. Everything is in place. Money flow buy signal coming into today.
Ooh, I love that
Very
money flow buy signal. That looks great.
Yep, and the checklist is telling you it's a go, and then you can click on semiconductors and see all the semiconductor stocks ranked by power gauge rating. So here's the very, very small cap semiconductor in test. And you can see that when power gauge and relative strength and money flow get in gear, the stock was $5 on the way to 17. And then one of my favorites, Kulik and Safa, Philadelphia company.
Ooh, that
So
looks nice. I haven't traded that one before.
Discovery engine. So let's put an oddball name in and end the webinar that way. Just pick a name. Not in tech. Well, I'm going to
Anybody
pick
want
one.
to pick a name?
Let's look at, yeah, let's. Someone in the audience?
SUP? Is that SUP, Helen? SUP, GME, LOVE?
Superior
EH.
Industries, very bullish power gauge rating. I don't even know what they do. And here are stocks like SUP. So auto components, microcap, strong cash flow, GTX, Tenneco, Modine, SMP, Horizon Global, and then weak stocks. So let's just take Modine, click on it, takes us back to the workspace. And here's another small cap auto parts company. Market cap's less than 600 million. And that's what the discovery engine can do for you. You seed it with a stock, and you could have done this back in November when the stock was trading at $9 on the way to 18. Starts with the discovery engine, seed it with something like SUP, and then you get new ideas. Here's SMP. Not as good, underperforming the market, so we like Modine. That's what this platform is all about. It's about workflow, ease of use, and new ideas.
That's exactly how I use it, Mark.
With the newsletter. I know you do. This comes with the newsletter, so you get my picks and the platform. And with that, we should probably call it a night. Thank you, Danielle, so much.
Of course. Thank you so much, Mark. I really appreciate you being here. For the remaining questions, we're going to have to direct you to Mark's customer service team. So we have, Mandy and Sarah from our team here in the background, but, we don't have access to your Chaiken memberships. So for all your questions about that, please contact info@chaikenanalytics.com, and they will be very happy to assist you.
I know
thank you,
there's a special
everyone.
offer.
Yes. Very exciting. So we will definitely talk to them about that, Helen. Can you sign up tomorrow? Mark, do you know how long the offer lasts for?
The offer is good through the end of the week.
Okay, great. All right, awesome. Well, Helen, we'll make sure I'll copy you on an email. How about that with the Chaiken team? But thank you so much, Mark, for being here. Great information. Loved it a lot. Well, we're gonna go ahead and head out, but we'll see you all next time.
Have you had dinner yet?
I did. I did. Did you?
I did. But
Excellent.
I saved dessert for last, so it's
Perfect.
waiting for me.
Excellent. Well, I hope that it's amazing.
Well, this has been amazing. Thank you, Danielle. Thank you to Daryl and everybody at Simpler, and have a good night.
Thank you so much, Mark. We will see you next time.
Looking forward to it.
Thank you. Thanks for everyone who's helping in the background. You guys are awesome. Have a good night.
See ya.